Everybody, happy Wednesday. If my voice gets crackly, I apologize. I have been a little sick underneath the weather, but I think I've on the downside of it. It's the reason why I haven't done some videos in a couple days. I've just lost my voice, been coughing, sneezing, and all kinds of stuff, but actually feeling good. So this video, I'm going to talk about, see, there it goes. Some things that I'm going to discuss right now, some things I'm going to be talking about in this video, and then I'm going to kind of come back and dive into each one of these. So some highlights here that I'm going to talk about. East Tennessee, our house prices have been up about 5% in 2023. That is actually the fourth highest in the country. So that number really shocked me. There, saying that we're up 5%, and that's the fourth highest in the country. It just tells you a lot of places the housing prices actually, went down or stayed very flat. If you make $75,000 or less, you can afford about 15% of the inventory that is available for sale. Another shocking number, crazy number. That one's very scary. And when you think about it, in this area, 2/3 of the population in this area make less than that. So that's some alarming numbers when you talk about actually, do we still have an inventory crisis, especially in the lower price point? I'll get into a lot of that. There was some polling done by the University of Michigan. 91% of the population right now think it's not a good time to buy. They did this, and that's actually like the lowest approval, I guess, for the time to buy since 1982, when the interest rate was 18%. Now, that's pretty wild to think about, 40 years doing this polling. That's kind of the lower consumer confidence in buying a house right now, and the interest rate was 18% back then. And then here, 8 out of 10 people right now, 8 out of 10 homeowners have an interest rate lower than 5%. So again, they don't want to sell to incur these higher interest rates. I have a few more notes, but that kind of being said, I'm going to really dive into a lot of these highlights here. So housing prices being up here 5%. I've kind of said it, I think this year we went back to pre-pandemic, with prices going up anywhere from like 3 to 6% a year. That was very standard across the real estate market, understood. And then all of a sudden we had this, COVID phenomenon come here. And of course, Knoxville, one of the most popular places that people wanted to move to, bringing a lot of money that we didn't have here, and a lot of, jobs, remote jobs that didn't exist, making a whole lot more money. So it just naturally boomed, and that's really why our prices have kind of still increased. Now, I've kind of said this in multiple videos. Man, I should have got a water before I started talking. I've said this in multiple videos. I think the above $500,000 price point is kind of flat and potentially even coming down, especially that on up from there. But that under $300,000 price point, as what's continued to go up and kind of keep prices going up on average there. The fourth highest in the country, I mean, geez, that's kind of crazy to think about when you think of, metro places, Knoxville being there. So all those people, houses are going to fall and blah, blah, even with high interest rates. And for, a lot of the population, the highest that they've ever seen. It's pretty crazy to think that our prices are still going up. So if rates were low, I think that it would nothing would have stopped. We would have still been in this crazy boom of everybody buying houses and everything going, for 10, 20, 30, 40, 50,000 over asking price. But when you think about here, the next part here, right? If you make $75,000 or less, you can only afford about 15% of the houses listed. With that being said, 2/3 of the locals here make less than $75,000. So you basically have 2/3 of the population here fighting for 15% of the inventory. And that just goes to show you why still some prices are going up, why you still see some multiple offer situations, why you still see some houses go pending in a day, is because of that. It is the lower price point, hands down. This is something I've been on for a while, is there's an inventory crisis for, under 300,000 or move-in ready 3-bedroom, 2-bath homes, that are priced fair. I think there's just a huge inventory crisis for it. You know, we work with a lot of buyers that fit that mold, and there's just nothing for them. There really isn't. I mean, they're ready to go. They're pre-approved, and we either get out there and see something that's a piece of crap, or, you know, we get out there and it is, you know, it's gobbled up by a cash buyer or something like that. I'm not really going to get into the 91% of people, you know, don't think it's a good time to buy. I mean, I have the conversation with every potential buyer, about buying, you know, what their situation is, because I don't think it's a bad time. I don't think you're going to lose, but I also don't think that you're just coming out, you know, hitting a home run, going to win. Like you hear a lot of realtors and lenders say, oh, it's getting into the best time to buy and you can get closing costs and repairs, which is true. Very true. And so you can always refinance and all that. So I think it's like a 50-50. I don't necessarily going to say it's the best time to buy, but it's obviously not the worst time to buy. I think it's situational. And if it makes sense for somebody to buy right now, you find the right home, then buy it. You're not going to lose, in my opinion. This one's key right now. And I think this is the reason why, you know, the housing market hasn't crashed. And especially in our market hasn't even really gone down. Prices went up. Is 8 out of 10 people have a mortgage rate less than 5%. People are not going to sell their current home. So people are not going to sell. They're going to make improvements to their current home, you know, potentially do additions, stuff like that. They're not going to sell because they can't even afford their own home if they had to buy it again because of what prices and rates have done. So it's simple supply demand economics there, and so you still have arguably limited supply. Inventory has went up, but we're not even at the level as what we were pre-COVID. And where I got a lot of these stats from, the guy was saying in the video that even in Knoxville in general, when you go back the last 10 years, our inventory's actually been slowly declining every year for 10 years until, you know, obviously it got like below 1,000, and now, you know, back up to 4,000, just recently climbed back up. But basically 10 years, you know, really, you look at what it's done. It was already on the downslope there. So I thought this was a pretty interesting survey, and it kind of goes in line with where my brain was. You know, a survey was done of kind of eligible home buyers there. You know, what interest rate would it take for you to basically come back to the market aggressively? You know, so you come back to the market, you know, really looking to buy, ready to go, and it was about 5.5 interest rate. That's kind of where I've been. I've kind of said, you know, once rates kind of get below the 6s, I think you're going to start seeing people come back into the market and be pretty comfortable. And so it looks like the survey there showed 5.5 is like the key. So for sellers, when you see that, here's the thing though. So where it gets into what a lot of people say, now's the best time to buy. You got to buy. You know, true, right? Once that rate does get lower, then you do have the buyers that's going to that's been waiting the last year. That's going to kind of flood the market. Now they've got cash flow built, or they've got, you know, their bank account built up, or got higher down payment. They can do more, get better loans, all that good stuff. But all of that was very, very interesting there. The forecast here, for the housing market, and this is what the speaker was saying. In 2024, it's another nobody's market. And that's really my opinion as well. I've been kind of saying this. We're really in a standoff. It's not a seller's market. It's not a buyer's market. However, certain price points, certain areas, certain niches, you do have one side getting favored. As a real estate contract goes, most of the time on the real estate contract, though, the buyer will win. You know, they're going to get some closing costs. They're going to get some repairs done over the seller there. But, you know, the buyer is also paying 30 to 40% more per month than what they would have paid 2 years ago for the same price of a house. So they're losing 30 to 40% already, you know, just in their monthly payment. So I'm totally agree with that. I think the 2024 is nobody's market. I think you're under 300,000, still the seller's market for good move-in ready homes. Fixer-uppers are hard to sell. If it needs work or needs a lot of updates, extremely hard to sell. So with that being said, let's get into some rental numbers here. So some rental numbers here. 99% of what they feel as potential rental homes are occupied. Now this is key, right? Because, you know, if there's a demand for rentals, the price will, If there's a supply of rentals, the price will go down. But when there's a demand for rentals and there are none, the price is going to go up. So what they're saying right now is that's why you see apartment complexes going up everywhere. Investors are here buying single family homes or 1031 exchanging, and they're turning them in rentals because we have such high rent demand here. Rent prices since COVID has gone up about 54%. So that's what they're saying, that if you looked at the average rent price pre-COVID, it's up about 54%. And odds are, if you really probably looked at the average home price pre-COVID, it's up 50+% as well. So really rent was hand in hand with the home prices, but now rent, whereas the home prices now is kind of flattened out, rent is still arguably going up much faster than what the home prices are now. Is again, it's simple supply demand. So here are some interesting numbers here. In 2018, the average sales price of a home 2018 was $250,000 in Knoxville. In the country, the United States, was $270,000. So Knoxville always been known as an affordable place to live. Under the average price. 2018 obviously alludes to that there. 2022 and a half. So I'm going to say like 6 months in, 2022 and a half. Knoxville for the first time basically touched the average price across the country, where both of them was about $425,000. So again, you look right there, that is, you're near, 40% increase almost from 2018 to 2022 and a half. So 4.5 years. That's just what the average price did. Today, now I thought this was pretty interesting. This goes to where, a lot of these states, especially the blue states, prices have gone down. They're hurting. The markets are getting really terrible there. If you jump I think it's really more so October of 2023. The average price around the country is $420,000. So the average price in the country is actually went down a little bit, but the average price here in the Knoxville area, $462,000. So our price actually went up, basically 10%. Since then, when you look at the average sales price, compared to what happened in what was like year 2022 and a half there. So about 10% increase for us, whereas the national average actually dropped. Very interesting there. So last thing I want to talk about here, it's comparing prices, comparing inventory available for October 2022 compared to October 2023. And again, this gets into everything that I've been saying, where there's an inventory crisis in this low price point. In October of 2022, under $300,000 homes, right? There was 287 available. All right, and this is like move-in ready, like good homes, right? Whereas October 2023, so a year from that, there's only 175. So you're talking a 30% decrease in inventory available, but you're also talking about a 30%, not quite, I guess October price, interest rates were up a little bit, but you're just talking also, a good decrease in purchasing power because of interest rates went up again. So it was just kind of like a perfect storm, where that under $300,000 price point is just so hard to buy in. And then getting into some more interesting stuff, between 300,000 and 500,000, October 2022, there were 392 homes. And then October 2023, 368 homes. So again, inventory even went down there in that price point. And I have it really for all the price points, but I'm going to jump to the $1 million. So I thought this was pretty interesting, right? October 2022, above $1 million was 64 homes. October 2023, above $1 million was 95 homes. So that shows you a 30% increase in homes above $1 million for sale. And I think it's a big reason of that price point, that above $1 million price point, isn't selling. It isn't selling because basically your mortgage payment when you're in $1 million price point, is kind of doubled from what it was with these interest rates. So yeah, pretty interesting stuff there. I like finding stuff that's like specific to the market. I do a lot of national stuff, but I really like talking about stuff that's like specific to our area. because I do think a lot of the national news and stuff, when we talk about housing market and all that stuff, doesn't necessarily apply to our area, because we are still growing and benefiting and everything like that. And I really don't see, you know, any sort of decrease. So, but as always, guys, if you ever got questions on any of this stuff, feel free to holler. Always happy to answer any questions. Y'all have a great day.